So it's not like everybody's dumping Tesla, but there are many people that are dumping, as others, of course, step in to buy because it takes both to make a deal.
Yeah, absolutely. But let's keep in mind one thing. You guys are nice enough to have me on regularly talking about our IMX data, what our clients are doing. And if you remember last year, for most of the year, especially when the stock was under $300, we talked about how our clients were net buyers of Tesla, particularly our millennial clients. Sixth most held stock by our millennial clients. And so with that, particularly, if I look at last week, stock above 900, they were selling with both hands. When it got back below there, they were small net buyers overall. But our clients, as this incredible run-up happened in end of January into February, our clients actually started to become sellers of the stock and taking some profits. And, God bless them. I hope they've been riding it up all that way.
So it suggests that your clients are very active in and out of positions. This isn't like a long-term ESG, Tesla's going to change the world, we're going to hold it forever kind of play?
Well, I think two things about that, Sarah. First of all, we measure those who trade at least once a month here. And so the second part of it is, yes, they may have been, I'm going to keep it forever, change the world. But when a stock has the type of move that it's had, to lighten up on that position probably makes some sense. And I think you're bringing up a very important point, Sarah, and that is the biggest thing most people struggle with is their time frame of when they invest. Why are you investing in Tesla? Are you trying to get in to sort of gamble that you'll have a quick $20 move as soon as you buy it? Probably not the best philosophy right now. Or are you saying this is going to change the world? And one thing I'd like to add to that, I'm not saying people necessarily need to trade options, but if you look at from now till Friday, the expected one standard deviation move is $89.80. Most people would be awesome with that if they buy the stock and it goes up that much. But are you prepared for if the stock goes down that much? And again, if that's the one standard deviation move, that's what's expected.
Did you see the story in the Journal over the weekend, either of you, about the people who had dared bet against Tesla and they've been destroyed? I mean, they highlighted, people that they were not necessarily professionals, but they'd bought some options or bought the equity short and got just crushed. Well, it's a dangerous stock. You got to be right. That's what I'm just saying. Either way, it's dangerous.
Go to Vegas, get the free drink, right? If you're just speculating. But that being said, Brian, first of all, for the individual investor at our firm or most firms, they're not going to be able to sell the stock short because it's hard to borrow. So it's mostly professionals who are short the stock. To your point, though, it has been, if you look at our millennial, particularly option trading, it's been well over 15% of their overall trades. The good thing, I guess, about that is since most options traders tend to be buyers, your risk is fixed. You know exactly what you can lose going in. So, in any investment, I think that's a good part of it. But overall, again, this is not for the faint of heart. The moves are amazing.
So what's the takeaway, JJ? Is it that you guys are predicting that Tesla might go down because you have this leading indicator saying that there was a lot of selling at around 900, or maybe it's not a leading indicator?
No, I think it's a great point. I think that people are one of the takeaways is that people are being smart. They're taking profits on things that they have bought overall. What I would say to people is there are more than 4,000 other stocks. You don't necessarily have to be involved in Tesla right now until the volatility comes in a little bit and we have more of something that's clear. From our IMX overall, I think it's interesting for people to know that the retail clients, I think, are doing a very good job, especially those who are at least taking once a month to be involved, of understanding their risk and taking advantage of some of the market situations.
I don't think and this follows up on Sarah's point, Lindsey, I don't think this is just another stock. I think this is a company where particularly climate-sensitive millennials believe this is one of, if not the only, pure plays on climate change. By the way, sexy company, sexy leader despite his dancing, right? The ESG aspect out there. This is, I'm not going to say a cult, but certainly this is people believe in this company as a major force. Some people say it'll be the biggest company in the world in a decade.
Well, last week I read that one of the most Googled phrases was, should I buy Tesla stock? So that tells you that it goes back to, a lot of people are talking about this stock and interested in this stock. But I also think that you can also tie it into what we're seeing in Uber and Lyft and the run-up in those stocks, too, as people start to think about driverless vehicles and the long-term EV down the road, what that means for the world. So I do think you're seeing that trend being accepted.
And one of the other things to play on what you just said that we saw is SPCE space, Virgin Technologies was also one of our most bought stocks last month, as I think people have an interest in what I'm not saying that anyone's going in there with their whole portfolio, but I think people have a definite interest in something that's new and exciting technology that they think will work out in the long term, that they do want to have some of their portfolio involved with.
And that ain't oil.
No, clearly not.
Can I add one thing on that? ExxonMobil, one of the most bought stocks by our millennials.
When?
Which, last month. Which I think is really interesting. Anecdotally talking to some of the people who have bought it, it's about the fact that they think that crude oil does have a bottom, at least in the shorter term. They can't, it's all about the yield. You got a 5.6 yield as of, just over that as of today on ExxonMobil stock. So they are also like, yeah, I might get capital appreciation on bonds, but even with that, I'm only going to get currently 1.6%. They feel as though with the great yield in Exxon that it might be a good play for a year or so.
That's surprising.